What do you want, Paul? I'm assuming it's Paul because it says LSU trader. What do you want, Paul? I'm assuming it's Paul because it says LSU trader. Are you still down there recovering from the hurricane? Are you still down there recovering from the hurricane? Oh, that's good though, because that thing was ready to hit you, if I remember right. Aren't you? Well, I know you're worried about like Lake Charles or whatever, or maybe not Lake Charles, or one of the lakes that were nearby. Oh, that's good though, because that thing was ready to hit you, if I remember right. Aren't you? Well, I know you're worried about like Lake Charles or whatever, or maybe not Lake Charles, or one of the lakes that were nearby. You know what I probably should do before anything is probably just explain my screen setup here. So we got the quote board right here. So we have all the micros that are going to be trading. I can flip between minis as well. We got the 1 minute right here. We have the hour. So you can see it right here, 60 minutes, 1 minute, 15 minute, 5 minute. You got Dom over here. And this is going to be my time and sales for ES. So minis. And then I'm going to be trading micros off of that. So since it's going to be basically move as minis go, why not just trade off of that itself is my thinking when it comes to this. So I can see where these orders are going through on. I can see the size to which they're on each side when the order does go through, the number of trades it took, and the volume right there. So one trade, 2 contracts were there, and you can see 1 bouncing back and forth. And then you got P&L up here, daily P&L right there, and that is about it. You can see 1 bouncing back and forth, and then you got P&L up here, daily P&L right there, and that is about it. What are you even rambling on about? This is slower than an iron butterfly on Robinhood. Like, how dare you even attempt that on Robinhood? Number one, that is just a death sentence. Slower than an iron butterfly on Robinhood. Like, how dare you even attempt that on Robinhood? Number one, that is just a death sentence. Oh, by the way, I don't even know if you've ever pulled it up before. So if you do a spread on Robinhood, it gives you just a completely different bid and ask compared to every other broker. They'll tell you it's tighter than it is, and then you'll go way beyond it. But if you just pull it up on like Toss or Tasty or just any other place that can actually show you the quote for the spread itself, it's significantly wider. And I think that's how they make their money. I don't know how it works, but it's just fucked up. Can actually show you the quote for the spread itself. It's significantly wider. But I think that's how they make their money. I don't know how it works, but face just fucked up. How you doing, Derek? Yeah, it is. The futures are slow tonight, man. There's a 3-point drop is off that. You get it all right back in this 1 minute candle. Who's reporting this week? I thought all the major names were reported. Yeah, he's doing better. Who's reporting this week? A lot of adjustments in life, but he's doing better. I thought all the major names were reported. Yeah, he's doing better. A lot of adjustments in life, but he's doing better. When is work? Is that early in the week? When is work? Is that early in the week? I think you'll like it. Especially on the rate you'll get for it. TD is just an asshole when it comes to this. You need to get 2 ticks out of every play. If you're trading micros, it is. Just to make your money back on commissions. And then they'll sit there and tell you that nobody's lower, no one can possibly go lower, and then you tell them like, oh yeah, AMP is doing this, and like, oh yeah, but we're a better platform, and you just laugh in their face when it comes to that because they're fucking terrible. Nobody's lower, no one can possibly go lower, and then you tell them like, oh yeah, AMP is doing this, and like, oh yeah, but we're a better platform, and you just laugh in their face when it comes to that because they're fucking terrible. That book map that they have though. The one that what's his face keeps posting about, Mr. Yen, that's what it is. They won't release that. I don't know why. I guess they're still testing it. That's fun. That'd be interesting to play around with that. They won't release that. I don't know why. I guess they're still testing it. That's fun. That'd be interesting to play around with that. Oh, they want like what, 250? Is it 250 total, or is it 250 to open, 250 to close? I'm glad that worked out though. How far do you stretch out the wings on that? I'm glad that worked out though. How far do you stretch out the wings on that? Oh shit, it is fucking $5 round trip. That's just dumb. Like, so if you're trading micro ES right here, so it's $1.25 a tick. You get 4 ticks to make your money back. That's just dumb. Like, so if you're trading micro ES right here, so it's $1.25 a tick. You get 4 ticks to make your money back. What'd you do for profit target on that? Did you do the, what was it, 20%? That 2% isn't bad. What's up, Blue? $0.38 on TD? Or are you talking about AMP? 38 cents on TD? Or are you talking about AMP? This is micro, yes. Yeah. Just scalping based on price action. And because stocks only go up, so it's best to just buy. I'm live now. Yeah. Can show you. Yeah, right up there. See, no more sims. I'm just not showing my account number. That's all. It would say Sim 1, but it's not. Ain't that about a bitch? I'm not gonna lie, I forgot what that even was. What was it? It was the... What was that? Oh, yeah. That shit killed, damn. The shitty part is getting adjusted like after coming back, and like his bedtime is like near like 9ish. Before it was like you'd be all set to go around like 7:38. So like your whole day just shifts and you get this like jet lag feeling. Especially missing like the great action that was like Friday. That shit sucks. Especially see your charts. Well, you can turn on chart trading. And you can just click on Dom trading, and you just click it up, and you can set it up for however whatever order type you want. So if I wanted to be short here for some reason, then I go down, click there. If I wanted to be long, click there. You can set exit like limits. You can set up buy stops, whatever order type you want to set up. So like if I wanted to like do this and like just drag it over across. Actually, I should get canceled before I go short again. Fuck. Man, my shit got ran and then ran again and then just fucking went up. That's a fun feeling. My shit got ran and then ran again and then just fucking went up. That's a fun feeling. Yeah, you'll notice it's pretty easy. Flatten, get you out, reverse, you know, in and out again. Cancel all orders. You can set the type of orders you want. It's pretty friendly platform. They got a bunch of YouTube videos too to get you going. Yeah, you can do that. You just set it up off on the side. I like their DOM charts better. You can see how much has been traded at that level since I reset it. So you can see like 19, 19, 18, and like highly contested area going long and above it starts thinning out a bit more. So that'll tell you where it was at today and so forth. Yeah. They do the red and blue army. They have a bit more detail to theirs. But it's kind of the same thing. You just want to know where the volume's at. Where they trading, why are they trading? Now you don't need to necessarily know why, but just know like levels are contested. You know, you can throw out lots of here and then just strip them away, but you want to know, you know, how much just went through. So 13 there, you can watch it over here. 18, 27, 19 moved it down. You can just keep track of it, so you're not trying to follow all these numbers. You can just see what's trading where. So like, I mean, that's a great tool to learn. What a little fake out shit whore this fucking thing is being. That's not a range I want to play. So anyways, yeah, so watch it. So you have 11, you have 12, what moves it up? So 55, 27, 3 traded there. So watch it. So you have 11, you have 12. See, and then piled in again. 28 piled in again. You just can see what was traded there. I think it's important to know, because if you try to follow, just watch how fast all these things change. Like, you can't, there's no way you can keep up in that was just, you know, a 7, 5, 8, 15, 17, 19 right there. Like, there's no way you can actually keep track of that at every single level. Like, you can't, there's no way you can keep up in that was just, you know, a 7, 5, 8, 15, 17, 19 right there. Like, there's no way you can actually keep track of that at every single level. There's a bunch of people that you can buy the data that'll keep track of it too. Like with TD has a book map, and you can just see the levels that were traded on here, or where people have stacking orders. So it makes it a lot easier. I do believe you have to pay for it. I'm not sure. I don't use it though. Yeah, it's just gonna be mirroring. It's a 10. There'll be some slight differences, but you know, maybe it does a tick in one way from the other, but no, it's not gonna be like 10-point difference between ES and micros. And the reason why I can't mirror it directly is simply because if ES traded it for even a split second, it gives you that split second advantage to make a move on the micro. So that's why it's a slightly different by that margin. I'm not sure. I've never seen it. I've seen it a couple times go to 0.5 difference, but it's not going to be deviating much. I'm not sure. I've never seen it. I've seen it a couple times. No, I haven't. I'm trying to watch this damn Denver Nuggets game, but it's fucking not loading. I'm trying to watch this damn Denver Nuggets game, but it's fucking not loading. Just implied move. So like if, like just in, you can kind of base it on just historical price action of the chart itself, and so you go back and you just look to see how fast things move on these plays, and if you can get something where, you know, like the expected move on, like, let's just put up like bowling, like let's say it's a 30-point move and you want to do $15 wings on each side and you're still playing within there, you can just scalp the move itself. You don't have to wait till expiration when it comes to that, but fully well knowing that whatever direction it goes, most likely the momentum will carry, and it's not going to be like, you know, a generational dip buying or a sell the pop type thing. But I mean, most of the time, the STO is going to be the way to go, especially if you can get it wide and outside of there. You'll get outliers that will do that, but if you define it accordingly to the point where, you know, if you miss on one earnings play on doing a $5 wings on each side, you know, you nail two other ones, you've already made up for that loss. So yeah, you have to make up more of a loss there, and you have to give up two plays where you could potentially be earning more on that. But that's the risk of selling to open. That's also the benefit of doing it, because you have a higher probability of playing outside of that historical options. Does that make sense though? Like it's just kind of like a natural feel that you have for based off of how it's moved in the past. It's not a predictive measure of anything. Like it's just kind of like a natural feel that you have for based off of how it's moved in the past. It's not a predictive measure of anything. What was it? It was like back in the day. It was MU, chip one, and it was one of those things where it's like you'd show up like an implied move of like 5, but it was always one of those things where you knew it was going to move further in every direction, like kind of like what AMD used to do, where it would just explode high or just absolutely tank into oblivion, and it would always try to price it like, oh, it's going to stay within this $2 range, and just like obliterate it and go into like a $10 range, that whatever it was. It's just, you kind of get the feel for that of always expect the worst. And maybe, you can set up broken wind butterflies to accommodate that too, drifting them out the money a little bit more and just creating a cap side of, if you're bullish on it, all right, and you think that there could be some downside because of whatever thing that's going on, you can do an out the money call broken wing butterfly that'll cap your gains like to like a $50, but if you get that spike in the right direction, that's where you create your next butterfly, and you'll get that what is it, 100 cent 150% pop on that if you nail it. But if it just utterly annihilates and goes forward, that's when you take your big loss. But that's why you have to play around with that a little bit, and you just get to know it. And how I always say, like, the best thing to do too is to try to cap it rather than try to make money off of it. I know that sounds stupid, and even hearing myself say it sounds kind of stupid, but if you walk into it saying like, I'm okay losing $50 on this, let's see how much money I can make losing $50 on this play, and then building off of that, and you'll be surprised on what you can come up with where, you're not aiming for a home run play. I think you'll be surprised at how much accuracy will go up, and the play probability will go up as well. See, I think that's one of the hardest parts about playing a Iron Condor when it comes to when it just bursts through it. Is the knowing when to cut. Because you get the moves like that where Zium just explodes. And you're like, this has to even come back just a little. I think I remember you telling me about that, and you were saying like blew past it, came back. And it, like, I mean, if you could have held out, if you really wanted, would you actually have made 100% on it if you held it? Like, especially if you can just get out, play something better, and then just move on. Like, I'd do that. I just like don't want to play this range right now, because if you look back, so I know the lines are not 100%, but it's just staying here between this shit. I don't want to play that with it. 36 and 34, $2 range or 2-point range. Until it actually like makes a move out of this and like holds it, then I'm gonna do that. What else is out there in this week in terms of like the economic calendar? We had like what, Jackson Hole a couple of weeks ago. We had NFP was this Friday. What do we have? CPI shit and consumer credit. NFP was this Friday. So it's a decent week for retail names out there. So that would be, so if I'm heading into next week, I'm looking at those. It's a decent week for retail names out there. Who else? Like what? Yeah, Walmart, Costco. We have the major ones. Amazon won't be affected by anything. Who cares? Godstock. When are you gonna start trading full time, Paul? Screw this lifestyle. Am I self-taught for futures? Yeah. self-taught for everything. Self-taught for everything. That's true. Why ruin it? I would do that though. If I was able to trade and work a full-time job, like 100%. Do it in a heartbeat. Why ruin it? I would do that though. If I was able to trade and work a full-time job, like 100%. Do it in a heartbeat. How does Sam trade? How does Sam trade? Okay. Just drawing squigglers everywhere. Trade above squiggly line Z. Short below squiggly line B. Uh-oh. Oh, my setup? Oh, with the time frames? Or a DOM? I think he's moved on to some a bunch of different stuff. He's got a wicked good setup though. If he ever gets back into streaming, you should watch him. How while back was that? Are you like talking about like his streams got you into trading? If this falls right back into this damn range again, it's gonna be the most boring 2 hours ever. If this falls right back into this damn range again, it's gonna be the most boring 2 hours ever. What are you doing? So we could do a go all technical and do like inverse head and shoulders. Like here we go, a little shoulder, a little head formation with a dip that was rebought, and then here's the other shoulder with a little hook. It's a great sign for investors pushing forward. No, Progression is in Western Mass. That place is awesome. They got great beer. No, Progression is in Western Mass. That place is awesome. They got great beer. That should work. Just tell me when to go long. I should have probably took that, but that's fine. That should work. Just tell me when to go long. I'm telling you though, if anybody's a beer drinker, Michigan is, I don't care what anybody says, Michigan is the capital for microbrews. They have the best beers. They have the best breweries. And I'm not even talking about like the major ones. Like everyone's like, oh yeah, Michigan Founders. No. There's so many good ones there. Like little ones that like are like holes in the wall, like type places, like where this dude just like found a recipe online and then started creating stuff, and then he opens up a little shack down the street. Like those places still compete and still are like just as good as Founders and everybody else. Shorts is fucking awesome. Right Brain in Traverse City has some of the best. Like this got like a brewery block essentially. There's like 8 of them. Best ones ever. No, I'm in Mass. I'm starting to notice that like almost every trader that I follow is in Mass too, like somewhere near the Boston area. There's a couple people that are in Western Mass with me that I just don't feel like reaching out to, but and everybody else is Boston, Nantucket, Cape Cod, all those places, or near like Hartford in Connecticut. That's because you're in the dirty South. No, my league wasn't set up. We usually do like a 200 buy-in, and since no one wants to commit that money, they're not gonna play. My league wasn't set up. We usually do like a 200 buy-in, and since no one wants to commit that money. This league also does like double QBs, and I hate that. I always wanted to try out this screen. Oh, cool. Alright, let's do that. Oh. I always wanted to try out this screen. Oh, cool. Alright, let's do that. It was like the pick your best for, is it the DraftKings type things? What am I doing? Video for myself? But when Europe opens up in 3 a.m., I'm not staying up till 3 a.m. Screw that. Yeah, we have a essentially a 4-point range since 8 p.m. I got suckered on that breakout. Essentially a 4-point range. You know what we could talk about? We could talk about what tomorrow is going to be like. So tomorrow I won't be available for most of the day. We have a consultation with the hospital. So let's figure out how we set up tomorrow. 1 second. Let's figure this out. A consultation with the hospital. So let's figure out how we set up tomorrow. So what's VIX at? VIX is still elevated. No matter if it's a recovery or not, stalling probably isn't going to be the biggest thing, especially with what do we have? We have small business index and consumer credit tomorrow. Not big movers. Thursday is still going to be the biggest thing again. Jobs will always be the biggest thing until the election, so Thursdays are your days to prep for. What else do we have? So let's talk about that. So gamma scalping. Gamma scalping is going to be what you want to do tomorrow. So a lot of people know these things as like iron butterflies. We have condor straddles. We have all these types of different things. We can dive into a couple of them on just determining how you want to set them up. And we can talk about the decay and everything if you want to go the 0 DTE route, 0 days till expiration. But give me just 1 second. And we can talk about the decay and everything if you want to go the 0 DTE route, 0 days till expiration. But give me just 1 second. Alright, so the typical thing to do on 0 DTEs, and there's a lot of people that they'll post about these and they have great strategies, they have great success rate with these, is they try to find a set standard with how they want to set this up in terms of deltas. Maybe it's historical vol when it comes to it, or implied move. I like working off the implied move because it just gives me a benchmark to set off at. And it's not set in stone. I'm not looking for a 5 delta. I'm not looking for a 10 delta each time. Even though you'll notice that most of the time they actually line up, but they differ in a sense. You know, you'll notice that implied move on some days will be maybe a $3 range on SPY, but then these, you just have a gut feeling that tells you, all right, there's no way that it does this. So, especially leading up into maybe some economic news that you feel is going to be clutch for the market. So when you're setting up, like, and let's go with an iron butterfly and deconstruct it down to its basic thing. It's just a straddle, right? You sell or buy whatever one you want to do, and you're just throwing caps on there. Caps are going to be your wings, so that's all it's going to be. It looks like you're a 5-year-old drawing a bird. All right, and you determine the speed of how you want to be able to scalp that based off of your straddle is going to be at the money wherever price opens at 9:30 in the morning. All right. So if you want it to move fast, you stretch out the wings as wide as possible on that. So let's say that right now we are opening up, let's just say it's SPY 343. All right. If you want that to move fast, if you're throwing this on there at a 343 and you do it down to a 338 or maybe a 348, you're going to get a faster movement on whichever way it breaks to, especially out of the gate. You notice that IV changes with it, theta changes with it, and you are going to then get that decay that you want if you're selling, or you're going to get a move against you if you're buying. All right, so it's pretty simple, and the reason why I don't like teaching a set strategy is because times like March happen, and you just get killed because you're sticking to your strategy because you know it works, but you have to know when your strategy doesn't work and when to say, all right, pull back. Wait for a moment that feels familiar to you, or a moment that fits within your strategy. All right. you see a lot of people that went into there selling 5 deltas that just got killed. But if you played the IM on this thing, it kind of switches up a little bit and gave them a wider range to work with, and you saw a better success rate when it comes to it. Yeah, you expect a higher move because VIX is high, and it's how it should be, you know. Yeah, so the essentials of everything again. So an iron butterfly is just a straddle, an iron condor is just a strangle, and then when you're capping it, that's when it becomes each one. That's when it becomes an iron butterfly. It becomes an iron condor based on how you're capping it. And then there's naked, just in general. So puts, calls, whatever way. So that's how you're going to be playing this. When you're expecting high volatility, if you are selling, you need to sell wide for protection. Okay, so you need to be, if you're selling an iron butterfly, you need to make that beyond the IM implied move. You don't want to get caught on the wrong side of that, because those are painful. All right, and same thing with iron condors. Sell way beyond it, a move where if it's saying the implied move is 5, you probably want to be looking for 7. I know you won't be collecting much from it, you won't be getting that, but you'll get the scalp that you want because it'll act more in nature of a naked position. But you are paying that extra amount for the time to react to it, and then the movement itself. All right, that should be your main focus. Tackle that, and then start defining your risk and how fast you feel you're comfortable playing with. And then that's kind of like what it goes down into in terms of Greeks, and knowing just, you know, if you're selling a 50 delta, all right, and then you are then buying the 10 for protection, all right. 50 minus 10, 40 is going to be moving at a 40, almost a 2 to 1. When it comes to that, that's going to be your speed, all right. And that's how you kind of determine how you play it. So if you really want a fast moving thing that you're going to be at the computer for, getting that high deltas, which is going to be great, keep it wider. But if you know all of a sudden you're at a job, all right, and you got a 10:30 meeting that you have to go, and you may not get that movement before, maybe it's okay to bring it in close, sacrifice some of the money that you're going to be making. But you know, all of a sudden, if it goes with you, it goes there, you're going to have time. So, or if it stalls in the sense, so you know you're in that 10:30 meeting until 11. It stalls, it's going to decay at a slower rate too, and you won't just get absolutely crushed if, you know, this play goes against you versus somewhere where your wings are wider. I would just be really cautious about looking at 70Ts right now because of just how high volatility is. You know, if we get some vaccine headline all of a sudden, you know, like what is the implied move for Friday? What is the implied move for Friday? Here, 1 second while I look it up. It's the 11th, right? Alright, you're looking at we'll just put it at $11. So if you're at right here, you're at let's just call it a 343. Yes, 1030. Okay, so just round up, just to be safe and just to work from your numbers like that. So look what you're playing with. So $11 added onto that, you're looking at a 353 or 354, and then, you know, minus 11 off that. So you have to sell beyond that, and look exactly where that puts you to. 53 is 353 or 354, right there. Like, let's just put it right there, okay? And then what? 32? Oh wait, excuse me. I messed up on that, didn't I? Yeah. Let's just put it right there. Okay. And then what? 32? Where is that? Right there. Oh wait, excuse me. And then where do we go to the next one? Sorry, I'm also looking at another screen right now. And just 1 second. Yeah, so alright, so there. So that's gonna be your range to play. Here, we'll do this, make it really easier to see. So by Friday it needs to stay within that range. Okay, so you could be, if you want to keep it tight, you sell the 330. You could be selling the 355s up and above. But look how much just in 2 days. 2 days it can make that move, and we still haven't even opened up this week. You're on a 4-day period. Maybe people are coming back from a holiday and they're just feeling lazy. They don't want to do anything, so they just play within this range. But I can tell you, I feel like if you broke lows here on that, I think you're gonna get a little bit more panic, especially like, oh shit, all right, we're gonna keep selling off, and I don't think it's gonna stop there. And what is it? So yeah, so most of the time they base it off of historical spots on the chart as well. So I'll just put it right there. So if you break that low, you're saying you're going to stop right about there based off of the applied move. I just don't like it. It's too much to work with, and that's why I like working with 0 DT when it comes to that. You have a tighter range and less time to work with, and it needs to make this miraculous move. But you can also make a lot of money off of doing what you're doing. Selling a longer one. It's not even 7. What am I saying? Why do I keep saying 7? It's 4. And you know, it's just, I don't know. Maybe. What are you gonna get on that though? Like how far are you making the wings, and how much would you get back on the play? Like, are you gonna do the you run a 5 delta on that as well? It's a 5 delta on that. Like, are you gonna do the you run a 5 delta on that as well? Oh, 5 delta actually puts you way out. I have to actually extend the strikes. Oh, 3? Okay. So you do a, for you would do a 332, and then you just do a 329 for like a put side. Oh yeah, of course. But yeah, just based it. I would, no matter how much it changes in terms of over the weekend, that's the move I would play off of if you're gonna do that. So it would be a 5 on that anyway, that they would normally do. Yuck. Obviously, if things didn't change. Where did we close Friday? Screw 5 delta. You get no money off of that. So anyway, so this is so what we're talking about with the earlier about the sell to open, buy to open type plays. So look at that range. If you wanted to say, you know what, we are going to make some big movements. Let's get rid of this. Let's get rid of this. Let's get rid of all this. You know what, we are going to make some big movements. Let's get rid of this. There we go. So let's just say we open up there and you just like, yep, we're gonna have volatility, but you know we're gonna go uppies or we're gonna do some downies here when it comes to that. So why not also play the scalp every day for that type of direction to the upside, and then just keep on scalping versus keeping the long exposure over the 4 days. I believe there's a Tuesday expiration, right? For SPY and SPX? Yeah. So you're still gonna get your 3 chances this week. And if you do a 3, based off of that, you're still gonna get your 3 chances this week. You're looking at what, 50 per side, collecting 100. So you're gonna be collecting. So most of the time it'll be about 50. You collect 100 per side. You make 100 risk 3. I think the better option is doing the 3 days, 0 DTs, doing a buy to open. You define it whether it be a condor or an iron butterfly, and just playing the scalp. And you can target $30, you can target $40 on each expiration, just based off of the move itself, and just like kind of timing your entry based on however you do it. And even if you get $30 per day, it's still going to be more than that, holding exposure for the 4 days. Can you suggest something for SPX 3290, and like what does that mean? Those are the strikes you want, or playing to that range? What are you trying to get there? So you want right there, and you want right there. Like, what's your time frame for that as well? You think that happens Monday? Right, 32. Why do I keep on doing that? You want lower. So you want way down there. That happens Monday. Right, 32. Why do I keep on doing that? Right there. Oof. Yeah, but range spreads for what time frame? Like, you could tell me I want 2021s, and that completely changes what the mentality going in the spread you'd want to take over the course of the time as well. Range spreads for what time frame? Like, you could tell me I want 2021s. That completely changes what the mentality going in for this week and 2 weeks. Well, that's kind of what we were talking about in terms of what you're doing. Let's see. So if you wanted to just sell that range for this week, 4 days. Well, that's kind of what we were talking about. So you just pop over to the September 11th, all right, and you can drop it down. If you wanted to sell that, your 290s or 3290s. So they're running about 15, and what's the, you said 3560s. They're running 2. So it depends on like what do you want to do with that? Do you want just like an iron condor when it comes to that, collect off this week off that range? And again, like, then it comes back to how much do you want to risk. You can tell me like, I want that range, but I only want to risk, $500 because that's the difference between the strikes, and you may not collect that much at all. Like, if you did that, what would you get? You would get, you may not even get anything with the call sign, and you may not collect that much. Yeah. So just maybe too tight of a range. So you have to. That's why whenever I do those like play recommendation things on Twitter, I want to know what you want to risk. I want to know if people give me a bias, they give me a bias, because it all depends on what you want to do. You can tell me like, oh, give me $1 billion risk and give me a play on this. You know, it just doesn't matter. $1 billion risk. Just notice if you're selling anything on SPX2, the strikes are 5 wide. That's $500 if you're selling per strike. Just notice if you're selling anything on SPX2, the strikes are 5 wide. That's $500 if you're selling per strike. You want to hedge for a week? Are you hedging long? Are you hedging short? You want to hedge for a week? Are you hedging long? Are you hedging short? Like, are you truly hedging, or is this just like a play that you want? I think a hedge typically means that you're willing to lose it. So like you may be deep 1,000 shares on something, and you're like, all right, give me something, a hedge in case there's downside risk on that. And you may grab $100 call, you know, but your $1,000 exposure to that, it'll just limit that. So what's your underlying position for the hedge? Yeah, but are you hedging a position like you're already net long through calls? Okay, I see what you're saying. Yeah. So you're long 5K calls on Microsoft, and you want a $5 or 500 hedge, so 10% on SPX. Do you want to make money off of this play, or do you want just the downside protection? And then you can also choose in determining that. So you can put on a slow acting hedge where if it actually hits, you'll make that money to ease the burden of those 5K calls, or you can do it where it's a slower decay on that, so that if you get to be Thursday or Friday, you can still take it off and still get some of that money back while your calls are still working for you as well. So that's the kind of thing that people don't really dive into. And the beauty of what options can be is you get to define what your contracts do. You don't have to play by a linear price action that is futures. You can decide whatever. You can create them to go up, down, left, right, all depending on what you build. Okay, so you want it to be a slower decay, meaning that towards the end of the week you want the option to still be able to walk away from money with your hedge. Alright, so run a put condor. And the reason for the put condor is you can define the speed better. You can do a butterfly, but the speed is slightly greater than a put condor on that. If you're trying to make money off your hedge too, you want to be selling against your position too, because that way if it goes against you, then you're obviously making money. But I would just go with a straight up put condor and find something that you can make for 500 off that, and you want to do it below wherever you're at currently. So if you're at a 343 right now, then you could be buying the 342s, selling like a 338, 336, and then be buying a 332 to still fit that range that you're talking about. Or excuse me, you were the 3229s, so then you could be creating something even greater than that. Just do like a 340, a 330, a 320, and then doing like a 310. Okay, so you're just doing it in like 10 increments. It's probably going to be more than the 500 that you're wanting, but that's the kind of general setup that I would want you to do. And the reason why for that is you're getting the action from the whichever the closest one is, and you're selling the two that would go against that. So most of the time you're going to be creating and getting the delta as close as much to the at the money one, and then using the downside one just for the protection as well. Otherwise you're just opened on the second end of the selling strike. So don't think about the capped end of the protection as a means of making money off of it. You're just doing that to make sure that the sell side on that is just working with you. So for instance, if you're at a 50 for the at the money strike, try to get maybe a 20 and a 15 delta on that. I'm just making up numbers, probably not going to be close to this. So you're getting a 35, and then it's moving at a 15 delta against you. And so $15 you'll lose every time it moves $1 against you from a $500 position. Gives you enough time, and then if it does go down, then you make some money off of it too. Does that make sense? If it doesn't, let me know and I'll try to explain it a different way. Does that make sense? If it doesn't, let me know and I'll try to explain it a different way. My only problem with if he was to sell naked calls against that, and then he wants his underlying position to go up, it depends on how much he wants that to be working against him. You also have the pop factor with it. No, not a put iron condor, a put condor. So it means that an iron condor means you're taking both sides. With the put condor, you're just going to be strictly playing puts. So that means you're going to be buying one, selling another, then buying another one. So you're basically the thinking is creating an iron condor within just puts itself. But yes, I don't think you'll get the $500 target that you're looking for with the $10 increments. Let me see. But I was just trying to give a general idea on how you should be targeting that, if that's what you want. It'll give you the time, it'll give you the ability to get out still with money even on a Thursday, Friday, and you won't just, unless it completely blows past you, or you just completely skyrocket. But if it skyrockets, you're loving that because you've already defined your risk and you already have that 5K and underlying calls going with you. So if you did it in 5 increments off of a 341 right now, what's we gonna do? So if you did it in 5 increments off of a 34. So here's just you just do the basic math behind it. So a 21 for the 30s, it's going for 21. 20s are going for 20. So you're at a $2 debit still. Then you're selling the next one for 18, and then you're at a $16 credit again, and then you're buying the next one for protection at 3,000 is 16. So you'll be able to get it. Just again, the likelihood, maybe extending that further to fit your bias a little bit, and maybe even taking that capped end off and taking that down past your 3290 strike that you're looking for. Maybe even dropping down to a 3280, a 3270 or something. Maybe jumping to 15 wide increments as well. Yeah, I'll see you later, Derek. Yeah, so the put and condor that you're talking about, if you wanted to run that, so let's just say where we're at right now with the 330, 315, 300, and then the 285 when it comes to that, it should run you about like 155. You'll get the speed that you want, you'll get the downside protection you want, you're not killing your upside protection when it hits. What would be the payout on that? I completely forgot. You're not killing your upside protection when it hits. But anyways, that's what you can target it. So if you're targeting 500, that's only 55 for that type of play. You can throw that on a September 11th too. Expiration, and then it still fits within there. So if you're looking at my screen, you know you're playing from. Let's get rid of some of these lines. So, you'll be playing from, what was it? You'll be covering this entire area all the way down. So, you'll be playing from, let's see, I'm trying to get it so you can at least see it so that you understand. Alright, so there. So that's how you'd be playing it. So 333, you could do downside through here, down, and roll with that from there. You can do a super wide. Maybe that's what you should do. And if you really want to hit this $500 mark, just go super wide on this. Alright, if you're saying we retest lows, maybe keep it consolidated here, spend the $55. If it hits, it's great. You're still keeping the upside, but you probably want a little bit more protection, probably for this entire range right here as well. So yeah, so just maybe even extend it out to you. I mean, you could, with $500, you can play for a lot. Let's see, I don't want to take this low right here because that's the bottom that everybody just a little reversed on, so boom. I bet you they run some stops here. Do I want to be quick enough to grab it and go? Like what? So what is that? You're playing for like a point? I don't want to play for a point. Nobody wants to play for a point. So if you want to look at candlestick patterns too when it comes to this, so inverted hammer, inverted doji, inverted hammer, you know, typical your thing would be, all right, I'm taking it once it breaks under that, but look at the reaction you just had off that level right there. Okay, it's just levels, and you're trying to guess the psychology behind each level. When this pushed down, this shot back up. All right, don't get cute with it. So, and that's the range that you don't want to. I don't want to play. Can I get the quick scout for there to there? I don't want to try. If it breaks through right here, maybe they run a few stops and pop it back up. I don't know. Definitely bearish presence right here, just because the pressure that's put down every time it pops up comes back down. So, and that's, you can see that on a smaller time frame, they pushed it down, they popped it up, they pushed it down, they popped it up, and now it's, you're playing for that. So let's just watch how it plays out. So that's what I'm gonna say. You guys got so many lines on my charts now. So the range broke, attempted to come back into it, still maintaining that. Let's see. And you can watch it over here too. Alright, so where are we at? 33.10 on there. You can watch it. This is how much has been added to it, traded to it. 318 versus 350 or 551, 552. And you can watch it over here too. Alright, so where are we at? Moved it down, moved it down. You can watch it. This is how much has been added to it, traded to it. 318 versus 350 or 5. You can see it right here. You can watch it more closely here if that one's too. See it right here. So you can watch it more closely here. Oh, 1 second. My sun is up. Alright, I'll be right back. I gotta handle this again. I gotta administer some medication. But, so that's what I'm talking about. With the, you can play for that quick scalp, knowing that it's probably gonna snap right back up, and then who knows if they just ran some stops on that. So when you zoom in, try to get it part of the picture as well. You run a few stops. Maybe someone said, alright, I'm gonna throw a stop there. They're just gonna let it run down. They're gonna snap it back up, and we'll see how it plays out from there. But it's quick, and then that's the intent. So just keep watching. So watch that go up to 77, now 120, 123. How was it traded at? All right, so you have the bid trade, you have the ask trade. Watch over here when it comes to that two. There you go. Pushing it lower, pushing it lower. Now it's on the ask. Now you have two more ends of the bid. And now they pop it back up. So they didn't let it lower. And you could watch it where they were attacking and where they were going. And it's hard to see in real time sometimes. From YouTube, I'm not sure. I don't think I have a super chat set up. I don't even know how to get. I think for super chat you have to have 1,000 subscribers. So if you actually truly wanted to do that, you would have to go to the website and just press donate. Sorry, I'm back. My son was diagnosed with type 1 diabetes, but the biggest problem that happened was DKA, which is diabetic ketoacidosis. He was at like 3 times the threshold for needing to be in the emergency room. And he's only 2 years old, so he can't really verbalize when he's hungry what he's gonna eat and everything. So we get to play chess every single day in determining what to feed him, how much insulin to give him, and it has not been fun. Not even the slightest bit. All right, and also while I was gone, it looks like we got that breakthrough. So again, this would be the next level that we're talking about. Is what was happening at these levels. 24. So you notice that it's a contention level, pushing down. Now you just watch. So again, if you're gonna just watch every single movement that happens, don't try to pay attention to these. What's going on over here? Where is it trading at? What's happening there? So you can just match it up with this, all in the ask. There you go, pushes it up. Match it, match it, match it, match it. See how much was traded, because 7, 5, 4, 3, 2, 27, 47. There's no way you can keep up with it. So just see what was traded. How much was traded? Because 7, 5, 4, 3, 2, 27, 47. There's no way you can keep up. So just see what was traded. How do I read it? So this is all for micros. This is for MES. This DOM is for MES. This is for ES. This DOM is for MES. Since these two will basically trade in tandem. I want the main product to which it follows to be right here. Since these two will basically trade in tandem. I want the main product to which it follows to be right here. $50 a day on micros. Every point, you need to just capture 10 points. And you look back through here on the 60 minute, and you say, could you have captured 10 points within there? So here's the problem. So we pull this back. So we have this, and we have each level is met with. Hold on 1 second. Sorry. So we hit this extend over, extend draw it. All right. So we have that, and then we hit extend drawing on this one. And we start, actually, pull this back down, erase. So you have levels, let's hit that, where once it breaks through, it hits this, and then it pops back up to a certain level. The previous level, so trend down, so stuck in this range, fell through that range, popped back up, hit the bottom, which was originally support, stayed within the range, pop back down, and so now we're at the same thing where you can take it short right here, but once it pops back into that range, since the last, what is this, hour, it's just been doing that. So that's maybe your cue for a little trend shift, or you can just retake it back down in hopes that it tests this range right here. For a little trend shift, or you can just retake it back down in hopes that it tests this range right here. So I mean, you can do it the same thing right here too. So trended down, fell into that range again that it was just trading in right here, pop back up towards the top, fell through, pop back up towards the top, fell through, pop back, fell through, and now we're in the same boat again. We're in the same boat again. So in all honesty, I'm probably looking for a play above this. So it breaks above that. You have the psychology behind a head and shoulders pattern here. Okay, so you have your hump, neckline support. So it's using this breakout right here, causing the new breakout there as that, and then you have your head that forms and it falls down. It doesn't need to necessarily test the exact same level as the giant misconception. It's the psychology of it tried to pop again for the second time. So this is your first pop, it failed. The second time it tried to pop, it then revisited the same lows from the first pop, and then it's like, all right, nobody wants to buy it here, but there's some people that want to buy it there, and then cause that pop again to form that right shoulder. So that's your head and shoulders pattern there. It does not need to be textbook, and fuck everybody who says that and tries to live by that, because that is not how it is. It is the mentality of the human mind to say they give in after the third attempt. Exactly. So then if you pull it back out, so if this is your 15-minute, it's the same thing. So this is that low right there. Or you can just do right here, pull it back to right here. So that's my $12 loss for the day, and it's the same thing. So extend it this way, same pattern there, across. So you can look for a retest back up to this line, which will be right up in there, and then whip over here and see how it's trading. Watch right here to see what orders are going through, how much size is going through, and that's one way you can read it. Because right now, here's what you don't care about. It's right in the middle between the two ranges. You don't care unless something major happens. So you're looking to start paying attention to time and sales at this level and that level. That way your eyes aren't completely glued on the screen. You can then start doing other things, like what I'm doing. And I'll actually, this is why I have to be back again. My sun is up again. Start doing other things, like what I'm doing. And I'll actually, this is why I have to be back again. My sun is up again. So that's kind of what I'm looking for here. When you see all this little yellow burst, you can see how it was attacked when the time of the executed trade happened. So you can see the bid size, you can see the ask size, plowed through it. There's 2, 1, 2, set it up for the next level. There's not much on the bid, 37 on the bid, and then you could watch it progress. And it took that all the way down from 37, with the 7 that was traded, down to 13, and all the way up. So again, this is why predictive things don't matter. So as you saw, that was taken up, then you see blue takes over, blue takes over, blue takes over more and more and more, and just works it down. This is why no one can, all levels and all that, and people that like call out targets, it's all just guessing where people are going to buy and sell. There's no actual hidden levels. You can just look up right here. All right, there's 44 people, 44 orders willing to stop that level currently. Now, no one has information on what orders are hidden up here. They have historical orders that are hidden up there, but that's about it. And so blue took over again, so yellow is pushing it up, blue is taking it down by pushing on the bid. And you can see how it starts off, pushes it all the way down to 2. Someone tried to stack it, kept it going, take it down, take it down, take it down. And that's how you can read what's kind of going on. Then you may notice that yellow takes back over again. So here, and then we finish the top. So that's what it's like. It's fun. You may notice that yellow takes back over again. So and run it right back down to the stop. So that's what it's like. It's fun. And if you extend this, oops, other way. Back down to the stop. Extend it up. Yeah, there's a couple chinks in the armor there, but that's fine. So that's the reason why I don't want to play this range, because now they'll take it down. What? This one took it down 4 points, so who knows how much they take this one down. It completes the head and shoulders pattern that is up here, but I want to play the retest and then break down if that's what happens. And so if you really want to pay attention closely, watch this right here that goes along with this. Yellow is going to be trying to push it up, blue is going to be trying to push it down. And so if you really want to pay attention closely, watch this right here that goes along with this. Yellow is going to be trying to push it up. So somebody really doesn't want it to drop, so that's why you're noticing the yellow. Yellow is going to push. Nobody wants to break it through that level again. Somebody really doesn't want it to drop. So that's why you're noticing the yellow. Yellow's going to push. Nobody wants to break it through that level again. So what you could do is, since that's the low right there, if they say, all right, if they take it back down to that level, that's where I want to go short for that next level. And whenever it bounces into it, that's where you just want to take profits. If it's 1 point, 2 point, 3 points, whatever it is. Take it back down to that level. That's where I want to go short for that next level. And whenever it bounces into it, that's where you just want to take profits. If it's 1 point, 2 point. If you're a candlestick person, you have the inverse, or excuse me, just the hammer. And then if it breaks above the resistance right there, that's where you typically get your pop, and that's how you want to play, just because that's where psychologically people play. Or excuse me, just the hammer. And you barely even get what, a point out of that? 2 points out of that? Your pop, and that's how you want to play, just because that's where psychologically people play. Yeah. And you barely even get what, a point out of that? 2 points out of that? So yeah, that's where I wanted to throw an order in. Because it would be a break back into that level again. I would be giving up that level. So yeah, that's where I wanted and then playing that. Because it would be a break back into that level again. I would be giving up that level. And then playing that. And you just try to take what it gives you. And don't try to get fancy with it. If I get a couple points out of it, great. And you just try to take what it gives you. And don't try to get fancy with it. If I get a couple points out of it, great. And major thanks to the person that DM'd me about the DKA. I really, really sincerely do appreciate that type of stuff. It's awesome. And Becky, my wife, she loves that type of stuff because it's a hard thing to kind of manage and handle, and especially on a day one of coming back and trying to figure everything out is difficult on both of us. Especially on a day one of coming back and trying to figure everything out is difficult on both of us. So this is level. So you notice how the volume on this really starts picking up, starts changing around this level, at that level. So that's where we determined everything was last time. It's the breakthrough. So now it broke into the next level. So you have to see now the reaction based off of, does it want to keep everything out of that level? You'll notice blue pick up, and you can see that volume, number of trades, and the bit size. You can see just how bad they want to push it, or if they're going to push it at all. Notice blue pick up, and you can see the volume, number of trades, and the bit size. You can see just how bad they want to push it, or if they're going to push it at all. All right, actually, I have to end the stream because my son is just having a really rough night. We'll go back and hopefully we'll hit this a little deeper. We will trade a little bit better where we're not away from the computer so much, and we'll go from there. We'll go back and hopefully we'll hit this a little deeper. We will trade a little bit better where we're not away from the computer so much, and we'll go from there.